Have you ever wondered how top-down analysis actually works in trading? My name is Nick. I've been trading Forex, crypto, and stocks for the past over a decade. I've made millions of dollars in all markets combined, and I'm going to show you here in this video. So, whenever we're looking at a chart, say for example a trade I'm in right now, CHFJPY, we start on the weekly time frame. On the weekly time frame, what we're looking for is we're looking for major support resistance zones. You can see I don't do anything crazy. I don't use any pyrotechnics or mental gymnastics or indicators or anything. I use a black background with white candlesticks. And then all I do is I just do these little rectangles in the chart to identify the support resistance zones. The key here is to make sure that you only use clear zones. We do not want to be drawing zones like this on the chart where prices just slash through it over and over again. Better zones are zones that are respected more. Not because they're more likely to bounce, but because they give you a better way of controlling risk. They give you a way of saying you can enter a sell at the zone, you can put a stop loss just above the zone, and you can set a target at a 1-to-1 risk-reward ratio, or whatever you like, and the trade becomes very simple. If it goes into profit and hits the profit target, you win. If it goes against you, which it will half the time, or it starts going sideways, you can close the trade as it starts to break above the zone, or as it starts going sideways. Generally before the stop loss, which means that your average win is going to be bigger than your average loss. So with that said, I'm in a short here on CHFJPY. This is the weekly chart. To go down, you then go to the daily chart. All you're really looking for is for the candles to start closing in a way that indicates that there's bearish pressure at a zone, say resistance. And the opposite is true for support. You're looking to see that there's bullish sensitivity and bullish rejection at a support zone. It's very simple, and there's not any specific candlestick pattern that you need to do this. All you need to do is look at the chart with both your eyes. And if you only have one eye, just look at the chart with one eye. It's okay. And if it starts to bounce, then the trade is perfectly fine to take. Now we go down to the 4-hour time frame. What are we looking for here on the 4-hour time frame? Nothing specific. The same thing you'd be looking at on the daily time frame. Price just starts to bounce at the zone. All you want to see is that price is not breaking past the recent highs. That's basically it. Then you go to the 1 hour. You can see price starts to reject the zone and go down. Then we go down to the 1 minute time frame, and we can see that price is going down. Then we go down to my personal favorite, which is the 5-second time frame. And you can see we have perfect candlestick confirmation here that price is broken below this 5-second zone, and we're coming back up here and we're retesting it, which means that right here we can actually get into a trade. We can take a sell here at this zone, stop loss just above 2.4 pip stop loss. That's kind of a wide stop loss for me. Normally I'll go down to maybe like 1.5 pips. And then we can set a profit target here at the next daily zone, which is further down here. And then just as like a very, very conservative trade, this is a 1-to-69 risk to reward ratio. Yes, I was bullshitting you on everything from like the 1 hour and the 1 minute. But basically all you'll be doing is you'll be going to the higher time frames, like weekly, for example, looking for price to get into a major zone, buy at support, sell at resistance. If you structure trades with 1-to-1 risk reward ratio, it becomes very simple to manage the risk for the trade. The reason that we enter at support resistance again is not because you can predict where price will bounce. You will only be right about 50% of the time. And if you don't believe me, you can start a demo account, or you can just do it on TradingView and you can back test this. Enter 1-to-1 risk reward ratios anywhere on the chart. It doesn't even matter if you're actually using support and resistance. If you enter 1-to-1 risk reward ratio trades anywhere on the chart and price starts going against you to your stop loss, and then it goes into profit and hits your profit target, about half the time it'll hit stop and about half the time it'll hit the profit target. You do not have any edge in drawing zones in the chart and trying to predict where price is going to go. That is why we don't use technical analysis at all, specifically support and resistance in my case, to try to predict or speculate. We use it because it's a good way of controlling risk. It gives you a clear place to enter, a clear place to place an invalidation, or your stop loss, in other words, and then a clear profit target, whether you want to do 1-to-1, 1-to-2, or higher. So that is a trade I'm in here on CHFJPY. Let's go ahead and look at a few other situations here for charts that are setting up right now. And I'm going to do this all right in front of you, that way you can see it all step by step. NZDJPY. You can see that here on the weekly chart, price is getting really close to a clear weekly zone. It's just an area where prices had a nice big bounce twice in the past, and now we're coming up pretty close to it again. You can see my alert. My alert is not below the support resistance zone. It's also, of course, not above, because if it breaks above the zone, then it becomes invalidated as a trading idea. My alert is inside the zone. You can also see that the zone is not too wide and it's also not too small. You do not want to be using zones like this, which have a range of, in this case, what is that, 120 pips. You also don't want to try to pinpoint the exact entry by doing stuff like this and trying to enter right there at the zone with a stop loss just above that zone like this, and then a target below at like 1 to 1 or 1 to 15 like some people do. That is just not, it's not as effective a way to trade, instead of just giving price a little bit of wiggle room, because price is not perfect. Sometimes it'll bounce at the zone, sometimes it'll break a little bit above the zone, and then it will just fall back below it. You want to give yourself a little bit of room. And then after you have the zone drawn and you enter there at the zone, you just place a stop above the zone, not too close, not too far, just above the zone, targeted a 1-to-1 risk reward ratio. If it starts breaking above the zone, and you'll be the first to know on the daily or the 4-hour time frame, really that's all I use, just the daily, the weekly, the 4-hour, just those 3 time frames. If it starts to break above, you'll be the first to know, because it's generally speaking, not going to do it in one candle on the 4-hour or daily, right? Generally it'll kind of consolidate for a bit, or it'll start creeping up with slow candles like that, and then it breaks. Then you can cut the trade there. Then your average loss becomes maybe 1/3 to 1/2 of the stop loss. And every now and then, of course, you'll get your stop loss hit on like a news event or something. There's no way to predict it or when it will happen, so it's not something to worry about, and it's not something to stress or obsess over fundamental news events and the million pieces of news and data that pours into the markets every day. It's just not worth worrying about, because even if you use news or fundamentals to try to predict price, you're only going to get it right half the time. And if you don't believe me, go and try it for yourself. I've done this. I've tested thousands of trading approaches. Maybe not thousands, but I for sure have tested hundreds of trading approaches using various indicators, various approaches and various systems and various ways to interpret risk and to interpret price action, support resistance and trend lines and Fibonacci and fundamental context and economic news releases. What I'm telling you is, if you keep things really, really simple and then you just structure risk like I'm showing you, trading becomes so much simpler. It becomes so much more predictable and sustainable. So I'm just waiting on NZD-JPY to come up into this zone, and then I'll look to sell there at the zone. So we'll set it back to the weekly. We'll go here to GBP-USD. Same sort of thing, right? We're not using zones like this, where, it kind of bounces here, and then it sort of broke above and bounced there, and we broke below and bounced here, and then we bounced again as resistance, and we broke above and bounced as support. We don't want a zone where price gets broken over and over. We want clear zones where price just has a habit of consistently bouncing at that exact region. Every now and then you'll get some leakage below the zone, right? We had a break, we had a retest and a little sell-off. We didn't break past the previous low, and instead we just came right back above. These areas just give you a lot more clear of a way to structure risk, because if they break past the zone, then the trade's invalidated. You can move on to the next one. So in this case, I'm waiting for price to get up here into this resistance zone, then I'm going to look to sell. I'll put a stop loss above the zone and a target below at 1-to-1. If it goes into profit, I'll try to hold it. It's generally a good idea to hold your winners a little bit longer than the losers. And if it breaks above the zone, I'll just look to exit a little bit early. So we'll go down here to AUD-USD. Same thing. This is very similar to GBP-USD in the sense that we have a clear zone. We have a clear bounce of resistance, broke above, faked out, came back below, found resistance again, came down, then we popped up here, and now we're almost about to be back into this zone. This is a good area to structure risk because we can enter a trade here at this zone. We can put our stop loss just above the zone, and in this case, that recent high right there, just to be safe, because it could come up there and test close to the high and then still fall. And then we set the target at 1-to-1. On a lot of the trades where you're correct, you'll notice that they tend to start moving into profit relatively quickly. My average trade duration is about a week for every single trade. Sometimes the trades take 2 weeks. It's rare, but sometimes it does. The last trade I was in that I lost on Euro USD, I was in that trade for about 2.5 weeks. And then sometimes the trades will move to profit target in 1 day. They will just spike down to the profit target. So for example, when price came in here the second time, right, it bounces resistance there, came up a second time. If you would have entered deep here into this zone, right, around the previous high, we had that one daily candle, and then we had this second daily candle pinned down. That would have had you out at the profit target within 2 days. It's two daily candles. So sometimes the trades happen quick and sometimes they don't. And when you're trading weekly and daily charts, generally speaking, I'm not in trades for months. It's generally a couple days to a week on average, and then in some cases longer, like 2 or 3 weeks. AUD-JPY is another one. Look how simple it is. We're on the daily chart here, but of course this is a weekly daily zone. If price pulls up into this zone, I'm going to look to enter a sell there. Stop loss above, target below, and just be off to the races. And you can do this with every single Forex pair. And you don't even have to do it in Forex. The same thing applies to crypto. The same thing applies to stocks, futures, indices, metals. The same thing applies to, you could trade commodities. You could trade corn futures. You can do whatever you want. The concepts of support and resistance and price bouncing at previous prices and moving up and down and going back and forth and just bouncing around at zones, it applies in virtually every single market. And it has for the past 100 years, at least in the US stock market, since you've had tradable assets on charts that people could look at and document and track prices. It's the same thing over and over and over again. Right now we have AUD Canadian dollar here basically at a zone. So what I'll be doing here is we're currently on a daily candle. I'll be waiting for price to start reject the zone, And then if we start pulling to the downside, then I'll probably look to take a sell here at the zone. Since price spiked a little bit deeper into these zones the last few times, I'm going to set an alert here just in case during London session tonight we get a spike deeper into the zone. That'll be the lowest risk trade. It's just to enter towards the top of the zone with a stop above and target below, because you have the least potential for loss and you have more potential for easy profit if it starts moving into profit relatively quickly. You'll also notice that trading weekly and daily zones, you don't have to try to be a hero and catch the next 1,000 pip move. If you're just catching a little pull away from a zone, in this case on AUD CAD, it would be about maybe 40 pips or so, right? 30, 40, 50 pips, just depending on exactly where you enter and exactly where your stop is. It's a very, very simple way to structure your trades using this top-down analysis. Just please don't use the 1 minute and the 5-second chart. And really even the 1 hour is not really necessary unless you're zoomed way out. But if you're zoomed way out on the 1 hour, it's basically like using a 4-hour chart or a daily chart. So yeah, the whole 1 minute, 5-second thing, it's complete bullshit. Don't listen to it. You can't. It's horrible to structure trades. Plus you got spreads, you got commissions, you got swap fees. It's not good to do it on the lower time frames, in my very humble opinion, having traded Forex for over a decade. Moving to Euro JPY, you can see I have a zone up there. If price pushes up into there, I'll look to sell. Stop above, target below. GBP Canadian dollar. I don't see anything here on this chart. Some people will say that this was a zone that recently got broken and retested and then came down and started to bounce and maybe will be going up to the upside. This could be the case, but for me, there's just a little bit too much price action here at this zone, with it going past up here, breaking above, then pulling back, and now we've bounced twice right here. We're making lower highs. It's just something I'm not interested in trading at the moment. You'll notice that as you get better at trading, you'll start to develop a kind of discretion, a kind of intuition, using your subjective judgment and your discernment of price action to start making better trading decisions. And that discretion is where a lot of people's edge lie, not in speculation, but in their discretion. Should you take a trade? Should you not take a trade? Should you risk a lower amount on a certain trade? Should you risk more on a higher quality trade? These are all things that you only learn from experience. Euro NZD, I see nothing. CAD JPY, I see nothing. GBP NZD for now, I see nothing until we get to one of these zones. GBP AUD, nothing. Euro AUD, nothing, except maybe when we get to this zone down here. However, we are making lower highs as we continue to bang here into this zone, so it might be something that I just skip. USD Canadian dollar, I see nothing at the current moment. As a matter of fact, this zone is not even that clear in my opinion. It's still something I'm watching, but what would be better is if we pull down here into the support. This would be an amazing place to buy, just because it's such a clear, obvious way to structure risk. If you buy there and put a stop below and a target above, it's only going to go one of two ways. At some point, it's going to go up or it's going to go down. And that's a really clear way to structure risk. NZD USD, looking for sells at this resistance zone, as I am on a lot of the other USD pairs as well. We got some better opportunities at the moment, but I'm still looking for that on NZD USD. It'll probably be a couple weeks before that sets up, if it sets up at all. And then Euro Canadian dollar, which we have a zone right here, but I'm not looking to trade. We're too consolidated here at this zone. We've had too much price action dip through the zone here. We've had that wick up there. What will be better on this is just to wait for price to come up here to these previous highs. And if price could get up into that region up here, this was probably an area where we might see a little bit of a bounce. Be good to structure risk. So with that said, that's exactly how I trade. It's very simple. If you want to follow my trades live free and all my analysis I share every day, you can join my free Telegram channel. I put polls in here. I do analysis every day. I share my explanations and everything. I share my thoughts, my P&L, like literally everything. And I've run this Telegram channel for the past 8 years. I'll put a link in the description and in the pinned comment below. That way you can join it and you can check it out if you want, but it's just a place where I share all my analysis and trades. So that'll be the link in the description, the pinned comment. Hope to see you in there, and I'll see you in the next video. Cheers, my friends. Happy trading.